Hello, everyone. Welcome to Trading Strategies session today, or Securing the Bag session. My name is Mathew. I'm a trainer at EGM Securities based in Nakuru. I'm here with my colleague, Robert. Robert, you can tell us where you're based in.
Yes, thank you. Yeah, thank you, Mathew. My name is Robert Mbogo, and I'm a financial market consultant with EGM Securities. I'm based in Thika Satellite Office, and basically, welcome to our presentation from wherever it is that you are in the world.
Cool. So today we want to look at trading in a range or a sideways trend. If you cannot see a trend, an uptrend or a downtrend, then probably you're in a consolidation. And the consolidation, if it's wide enough, it gives a range. Okay, so you just need to check for key support and resistance levels that form upper and lower range. The wider the range, the better. If it's not a very wide range, then it becomes risky to trade. And we look into all this as we check out the examples on the live charts. So this is a classical example of a range setup. You realize the price is pushing up to a certain level, and then it trends downside again, pushes up, and then moves downward again, and it is reversing just around the same levels. So it's not an uptrend, nor is it a downtrend. So it keeps oscillating between resistance areas and support levels. So in this case, on the lower side is where you have the support levels. On the higher side, or the swing highs, is where you have the resistance areas. So these are the things to be on the lookout for, so you can have an effective plan in trading the ranges. One thing, check out for the mid level within a range, because there are times if you have got a very wide range, then you might have the price also getting support or resistance at the middle of the range. It's very important as well. Sometimes you might want to use the middle of the range as a confirmation for an upward move to the upper range, or if it's below the range, then you can use it as a confirmation for a strong move to the low of the range. Check out the previous trend before a range. There's a likelihood that the previous trend might give a likely direction after the breakout of the range. If you have been on an uptrend and then the price forms a range, there's a likelihood it could be a consolidation before a continuation to the upside if it breaks in that direction. However, it's not 100% that it has to follow. It has to be in the direction of the previous trend. Another thing, it's good to use indicators to confirm the reversals, because you're looking at the likely change of the trend around the resistance area. So you've got an indicator which can help you see the reverse of the trend from maybe around the resistance to the downside. It can be very helpful. And such indicators can be stochastic or RSI. And if you have got another indicator which can help that, then it can be a really good booster in terms of making or giving a clear direction of these minor trends in a range. You can use reversal patterns as well, where you have wide ranges. You can look at reversal patterns like double tops, double bottoms, and as well candlestick chart patterns, right?
Yeah, pretty much.
Like for example, Robert, what candlestick chart patterns you would suggest for reversals?
Yeah,
along the resistance and support.
Yeah, so basically we'll be looking at the live charts on my end, and we'll see that in some cases, when you look, this is more of like a confirmation. Now you've realized you're in a range, the trend has probably been dropping, and then, you know, price will always get into something like a range. Yeah. It's a way of like, it's like taking a breather, you know, the trend is kind of taking a breather. And in most cases, this is where like you're looking at, you know, guys looking at setups where like, what's the next move? And in most cases, if you're not careful, this is a trap move. It's one of the traps that many traders get caught up in. So basically, as a trader, you have to look at, can you see, what are the candlesticks that can you see presenting themselves, right?
Okay.
If let's say you're going at the support level, what can you see on the double bottom? Can you see, let's say, bullish engulfing? Can you see a hammer? You know, what candlesticks, basically, when you're looking at those, that one gives you an edge. It adds on to your confirmations to know that, you know what, I could take this trade up to the next resistance level, you know, because at the end of the day, markets will range almost 70% of the time. Trends will be like 30%. So yeah, we must really know how to take these setups and make money out of them.
Right. So maybe that's if you're ready to share, you can show us all those on the charts, right?
Yes. Let me open up
my. So just share and show us.
Yeah. So
awesome.
Like for example, when we're looking at, let's say, GBP USD in this scenario, now this is where like I'm using an indicator, stochastic, right? As it's part of the arsenal. So we can see that market has been ranging. So you can take advantage of these areas, and you'll realize that there are some wicks that are being drawn at the support at these resistance levels, right? If you look at the also support levels, there's a way that you can look at the spikes, and you can realize, oh, what are these guys trying to do? If you look at these candlesticks, probably at support, you'll realize that this could give you a cue that probably, most likely in this case, probably you're going scalping because of the time frame. Yeah. So you could probably be looking at opportunities to enter probably at a certain level around here. So you can bank on your 20 pips, walk away. Once again, make sure that you're looking at the resistance levels, and you're able to draw these up. So if you get to this point, then you can see probably setups like an evening star, right? So you're looking at this and you're saying, you know what, this trade kind of looks like it's about to play out, and they've drawn in the evening star. So let me take advantage of this trade. So you must make sure that you're looking at these trades and drawing up conclusions. As Mathew, you said, yeah, in most cases, the range will come after some big move. You know, like for example, in this case, we can see price was on a downtrend, yeah, and then it was time for like the market was taking something like a breather over here. So you can see like the market keeps ranging at this point in time. So it will be up to you as a trader to realize, and you not get caught up in the fake outs. Yeah. So make sure that you're trading based on closed candles. If we look down at the indicator window here, you'll see stochastics kind of like gives you these levels. You have the overbought and oversold levels. So you're able to add on to your arsenal of confirmations. Now, if you now have that string of confirmations, where you have the indicator, you can look at the candlesticks, the reversal candlesticks, and you've already drawn up the support resistance levels. Then this, you can take advantage of such setups, and with a view of, you know, milking some pips from the market. Let's have a look at ODUSD. But let's look at the crosses. You know, most of these ranges happen, especially when you're trading like most of the crosses. Yeah. So if you look at OD and ZDD, then you'll see levels of support resistance. So this is on H1. You can look at the candlestick formations. In one way or the other, they are drawing wicks, and this is where like you should be able to look at candlestick patterns that are forming at these levels. Yeah. And as you can see, stochastic on the other end, Down here, you can see it's been oversold. So kind of gives you an edge in identifying like a reversal pattern that's about to play out. Yeah. And from there, then maybe you can look at the reversal candlesticks and see, you know, what's the possibility of this setup playing out. If we look at Euro CHF, the same thing. This pair at one point in time was called the King of Ranging. I don't know whether they still have that title.
Times change.
Yeah,
seasons change, times change.
Times change, man. So Euro CHF was the king at some point. So you can see the ranging over here. If you look at this setup, you'll see probably this setup was meant to break downwards. This is where, like, I agree with you when you shared and say that you should be careful not to be caught up in a trap move. Yeah, because if we look left, because as traders, we know like technical analysis is all about looking left to trade right. You can see this trade was kind of like forming a double top, and you know, it's a cue maybe that this market is supposed to drop, consolidate over here, then drop again. But you see what they did, they went to the upside again. So you should be careful. But once again, you're looking at these levels in this whole range. This is H4. You can see like these guys did range for quite some time, price over here. So once again, use the Indy as part of your confirmation so that you can take opportunities of buying and selling the currency pair at levels. When they hit the support levels, you can take up the levels based on also a confirmation on, let's say, like, for example, here, the hammer. You know, you could take this position on this candlestick, yeah, and go to the next resistance level. So these are the setups probably I was looking at earlier, and I realized, you know, they presented that. So it's all about combining. Let's not just have the support levels drawn up. Let's have a combination of, you know, an Indy that probably gives you an edge, and also you're looking at that price action. What are the candles? What candlesticks can you see? Can you see the reversal candlesticks? Then that way now you're able to play out the edge. Mathew, maybe you could add on to this.
That is great. I think, I mean, I don't have as much to add there. Maybe share a little bit from my end as well.
Awesome.
So let me share my screen. Okay. Let me know when you can see my screen.
Yes.
Right?
Quite
you can see it, right?
Yeah, it's awesome.
Okay, someone on the in attendance can confirm for me. Just give me a chat, tell me if they can see my screen. Right? So you look at a few examples as well. Okay, great. I see it there. So with me here, I'm looking at euro dollar, and I'm on 4 hours chart. So in the presentation, remember what we looked at, that if you don't seeing an uptrend or a downtrend, then what you up to is a range. This was an uptrend. After this strong uptrend, then we had a range. Here, the price is just moving within this upper limit and this lower limit. Let's check again. We had a strong downward move here. After that strong downward move, then we have this consolidation, okay, which gives a range as well. So you have the support level, we have the resistance level there. Where else? It's not really quite clear, but look at this one. It's a very strong downtrend. There's another range forming here. And I want to show the possibilities of having price being influenced by the previous trend. Look at this strong downward move. After that, we have a consolidation, then they break up into the downside. After a very strong upward move, this one nullified the influence of the trend, right, to the direction that the price takes after a range. Now, because we're in a 4 hours time frame, sometimes when you find a range, you might want to go to a lower time frame to see it clearly so that you can have a wider range where you can take advantage of the market. I also mentioned that it's good that find the midpoint or be careful about the midpoint of the range. And in this case, let me use a rectangle here to just note the midpoint, which we had here. You see that? So that midpoint is very important because it can help you know when you have a strong downward move or a weak downward move. Okay, like in this case, once the price dropped below this midpoint, then it strongly went downwards, right? In the other case, let's see whether you can see a midpoint using a rectangle, and check out here, right at the middle, we can see levels where price got support, resistance, and after climbing above that area or breaking that area or getting support around that area, then the minor trends went up, right? You can see those instances, like this case here, price breaking through there, that midpoint moves downward, okay? Previously here, the price got support at this level, and that's when there was some strength to move all the way to the upside, right? So it's important also to note these midpoints when you're in a range because they're very helpful, okay? Those are the setups that we had in this for the case of Euro USD. Something else you can use to enhance or have very clear entries in the market is when you are using indicators like RSI or oscillator. Let me use a stochastic oscillator. I like stochastic oscillator. So you add it that way, it can help get clear entries or signals on the likely reversals. So in this case, I have a stochastic here. You can do the settings that really align with your levels. Like for instance here, you can even go to 20 and then have 1 and another one here, 1. Let's see how it comes up. Something like that. Okay, it can give clear entries as well. So what you're looking up for here is when the price is getting off from there. When the price is at resistance, then look at the stochastic getting from the overbought area. For instance, let's check out here. I will use a shape to indicate. At this point, when the price was getting off the oversold, at that area, let me use a red rectangle. Okay. When the price was getting off that level, I can feel it so that we can maybe see it clearly. Is it clear from on your end?
Yes, Robert? It is. It is. It is.
Let me leave it that way then. So if you check right below it, right below that level, we can see that, let me max here, see. So right below it, check out how the stochastic is just getting from the overbought areas, like this level, okay? With this move from the 80s, the overbought area to the downside, then also you have the price getting resistance and bouncing off the resistance of the range, okay? It's something that you can use as well. Let's check out for the case of a signal to buy or going long just within the range. On the lower end, we have the price getting support at that area. And if we check right on the stochastic, right below it, you see how it's bouncing off that level, 20s level, moving upwards. Okay, it's giving confirmation for a likely upward move, right? So that's something we can exploit in the markets to get entries. Looking at the UK oil on a daily, in this case, we've checked out using stochastic. So looking at at Brent or UK oil, it's in a range as well. It's been caught up in a range since the beginning of, let me check, since the beginning of the year. It's just within ranging. Actually, yeah, since the beginning of 2020, 2022, still in a range, but this is on a daily. So we have got a moving average that you can use as well to confirm when the price is bouncing off the resistance, like this crossover to the downside here. And also you can use the momentum to the downside. So let me use a crosshair to show. At this point, when the price is getting resistance from the top of this range, check out that with this resistance level here, and specifically, specifically this one, right? Check out how the price went below the moving averages, okay? And there was a crossover here. At the time you had a crossover, there was also the momentum going below the 100 level. That one confirms a downside. So you can as well use the moving averages, okay, to confirm when the price is on a downward move. But this one will work only if you have a very wide range. Like in this case, you have a daily range. So if you move to like a lower time frame, like for 4 hours, it's going to be very, very clear. Okay, very clear. In this case, the crossover to the downside along this level here. So this is where you're identifying the range within a very high time frame, and then you check out what else is confirming that. With this resistance here, price moving to the downside, then check crossover to the downside. On the other side, on the indicator, you have the momentum going below 100 mark. Yeah.
Awesome setup.
Let's look at what if we identify the midpoint here. So let me use a rectangle to identify the midpoint of this range. I mean, that's where the price has been. Look at this. Look at this. At this midpoint, it's like the pivot, right? Sometimes price hits there, it's not able to break the downside. Gets the strength to move to the upside again. So the midpoint is very important. And by the way, for the people who use Fibonacci, you can as well include your Fibonacci now in line with that midpoint. I mean, you can integrate some other tools to work together with that range. For instance, if I use a Fibonacci in this case, to find a likely reversal to the downside, if you draw it from that point all the way to that level, you realize that there's a way that the price is hitting the 50 level. Okay. You can also look for a confluence in this case where in this downtrend, if the price doesn't move beyond these moving averages, then could be a likely entry to the downside again. Okay. So if you can clearly see the ranges from higher time frames, they can be good setups even to use other indicators. In this case, look, there's a strong move here. And in this case, there was some entry at the 61.8 level. This part here, with this strong move from the lower part of this range, price went up, right?
Yeah.
I pulled back to this 61.8, got a chance to enter to the upside. You see that?
Yeah, true.
Yeah. Anything to add? What would you say about the targets, Robert, when it comes to these ranges?
No, the targets here in most cases, it all depends on the time frame. Yeah. So if you're looking at higher time frames, then you're looking at an opportunity to probably catch a bigger wide of pips. Yeah. But I think at the end of the day, you must make sure that you're not caught up in trap moves. So basically, you're looking at the drawn up support and resistance level. So if you took an entry at the top, at the high, then you're looking at exiting, of course, at the bottom at support. So that way you're able to secure yourself. Otherwise, you could be caught up in a trap. And make sure that when you're entering at the mid level, then there's also a risk you could be exposing yourself because the market may decide now it's time for it to break. So I think when you're in a trading when you're trading a range, then the best trade setup will be trying to catch them at the high if you're shorting, or at the bottom if you're going long.
Okay, that's great. That's great, Robert. I think, like you mentioned clearly, that unless if it's a very wide range, you be very careful with the midpoints. Huh?
Yeah, pretty much.
And let me use a shape which is filled up. Let me fill this rectangle just to indicate what you just said. Like just let me fill it so that if you are looking for if you entered around that area, of course, after getting a confirmation, then you targeting to have your profits just around
down there,
the support area,
at the support area. Yeah.
If you got your entries around the support area, you're looking forward to have your profits just near the resistance levels. But if it's a very wide range and you have a midpoint, you can also be very careful about. You can have your trades. You can close partially or protect whatever you have.
True.
Right?
Yeah.
And something I'm getting here, we talked about other setups that you can combine with the ranges, something like a double bottom or double top, and I'm finding those setups around this daily range for the oil.
For the oil, you can see even a triple top.
Yeah, triple top. But let's check out. I'll now remove these target areas. Let me remove them so that we can check out. Sorry, I want to remove those two rectangles. No, I can't remove all of them. Let me just remove this rectangle and the other one so that they're clear. So help me to check out for this, Robert. In this case, I see there was a strong downward move here.
Yeah.
Okay.
Found some support.
All right. Support went up again.
Yeah.
After a short attempt to pull back to breach that contract. Sorry, not contract. To breach that trend. Where am I getting the issues about contract? Wow.
You're already taking setups, man. Really? You're already taking setups, bro.
I'm thinking about the contracts to enter here or what?
Yes, okay. You're really on your lot sizes, man.
Okay, so look at that. And then this is the neckline. And right after this,
the neckline.
There's that move to the upside.
Just look at that spike, my friend.
But this spike, it's good for a trader who had a good stop loss at the two bottoms.
Yeah, below.
That would have been better. Yeah.
Yeah. And that means you didn't chase this trade, yeah. You know, like once you see the complete neckline, you know, the guys will go in really at this point in time above the neckline, yeah. Yeah. And of course, their stop loss at this point in time will have been taken out by that spike.
Okay, and then this one reminds me of something. It's always good as a trader to be aware of the events in the market, because such spikes they come with events.
News.
So if you know there are events coming up, and I think I would want to see when exactly this one happened, it's always good to check out when you have news coming up. This was around 1. Okay, probably there was a report around this area which caused this big spike. It doesn't happen out of the blues. No. For someone who knows how to use the economic calendar, they have an advantage. You can keep away from that level of risk. But if you don't know, then of course you get caught up with this. Another way to approach this is where you place your stop loss. The best levels will be at key areas. So whenever you're trading these reversals, just have the stop loss on the bottoms.
Yeah, below support and resistance levels, below and above in the case of the resistance levels, so that you're not whipsawed.
I don't know whether there's another reversal pattern that we can look around that range for the oil. I don't see any, but I think those examples are sufficient for now.
I love that. I love that. Triple top over there speaks volumes. Yeah, there's something is playing out.
There is a triple top on 4 hours, right? Let me check it out. This one here.
Yeah,
good. That's a great one as well. Let me just mark it out for the viewers to see. Is that top? Okay, that one, right?
Yeah, you can have a look at that one. That
Another one here.
Then they came
So
back again.
where is
Then
the other one?
dropped.
Another top. Okay. And in this case, so someone could have waited for a breach of this level.
Waited, go for the reset,
Mhm.
retest, sorry.
Yeah.
And the bullish candle, yeah, the green candle could have been an opportunity to for that retest to happen, then drop with the next bearish candle.
Something interesting as well.
Yeah.
Mhm. So yeah,
Wow.
go ahead, Robert.
I know. I just love that setup. Yeah.
Mhm.
I love that setup. Anytime we see a triple top, in most cases, that trade will give you good pips. In most cases, 90% of the time, once you are the right zone, market structure is right, then in most cases it gives you a very good awesome setup.
Do you also see a crossover to the downside for the moving averages?
Yeah, there's that cross. Yeah.
Yeah. A great one.
Wow.
So this
Nice
one brings
setup.
me to the question that I'm getting from the viewers.
Yeah.
Hugh Doon is asking, what do you think about EMA moving averages 8 and 21 crossover? We can quickly change and we see it will still work. So the importance of using moving averages is just to smooth out the movement, to smooth out the trend. And whenever you have a crossover, then it gives you a signal of a likely change in trend. Maybe if you're here with us, calling yourself Qtune, we can change this, like the 50. Let me change it to 21 and see what happens. 21. I have the red one as a EMA 9, right? Red one as a 8. Sorry. There we are. It will still show you the same results. Where we had crossover to the downside, it's working.
Yeah.
Is this trend is working? But now what will happen is these are they'll be moving a little bit faster. So there might be a little bit noise. They might have a little bit more noise as compared to when we have this one as a 50. You see it's a little bit more clear. Okay. And the other one, we have it as what's 20. Okay. So the essence is to remove the noise in the charts. So if they are if you're using less periods like 8 and 21, you might want to again put up with more noise in the markets.
Yeah, the higher the period, the better, the better in terms of
clearing the noise. Clearing the noise.
Yeah, it clears the noise. 50, 100, 200. That's something that really works really well.
Okay, there's someone here who is posting things that are not good. There's someone who is just posting things which are not good. Please ignore this.
Wow. Okay.
That's really not good. Apologies for this. I don't know who has invaded our space. Someone is posting negative stuff. Just ignore that, dear viewers. Right. So, what views do you have on scalping?
Scalping.
Someone is asking that. Yeah.
Awesome.
Tell us, Robert.
I think at the end of the day, we know we identify ourselves in 4 classifications as traders. Yeah, scalping, day trader, swing trader, position trader. Scalping, it all depends on your personality. This is where, like, probably you've realized, in some cases, especially when you're beginning, you're starting out in this business, you tend to do a lot of scalping because you're really not patient. Probably even you really don't have the knowledge as to why you're taking that setup, which is 90% of the guys who are coming into the industry. Most of them don't have the knowledge until they blow an account and realize, we need the free knowledge. And this is where, like, us as the satellite offices, you in Nakuru, me in Thika, we have Kitengela and Eldoret, we're providing this free knowledge so that you can come in and get to understand what it is that you're doing, yeah. And instead of being a fluke, yeah. So I would say it all depends on your personality. When you figure out the kind of a person you are. If you're not patient enough, of course, when you're starting out, you'll tend to go for the 10, 20 pips. But it all depends on you. I wouldn't say scalping is bad. Figure out who you are. This is part of trading psychology, Matthew. Like,
Sure.
you shouldn't, if you're not able to hold a trade for even 2 days, as you start it out, by all means, go for the 20 pips as you build up your confidence. Yeah. And that's the only way that you'll probably, as you realize that as you go forward, then you'll start having, the courage. As you have more knowledge also, you're able to look at your setups and make an informed decision and probably hold your trades for 50, 100, 200. Yeah. So in a nutshell, your personality. Who are you? Figure out who you are.
It has to be in line with your style of trading.
Yeah.
But if you wanted to know whether you can make money with scalping, yes, you can. But it's a high frequency style of trading. So make sure that you've got tools which are favoring that as well. Make sure you can get good moves within a very short time. Okay, so it's a high frequency trading style. So if you up to that, then it can work. Someone is asking me to look out on NASDAQ. So that's why I'm looking for that chart. Now let's analyze it in terms, using the strategy that we have here. Okay. What do I see? It's been bearish all along. Okay, let's go to weekly, check what's happening, and then maybe look at history. So all along, we had a strong run as from 2020, moving all the way from which levels? This level of 6,700 from 2020, and it's gone all the way to 16,570 all-time highs. But then look at the move. After a very strong rally, we have a pullback. Okay, when you have a pullback, then it gives opportunities for entry to push us higher and higher and higher. So currently here it's at a level where was at September and November 2020. Okay, so then you never know whether it will find support around this area. But with these indices, you see this one is a combination of it's tracking performance of a basket of 100 tech stocks. So so if the tech stocks are really performing badly, then you have this downward move, and especially if the interest rates are keeping on rising for the USD, then it's going to hurt the stocks. So up until we have a containment of the rising interest rates, then that's when you're likely to find a bounce to the upside. But one thing to note is once you have a very strong pullback, then you're likely to find a strong move to the upside. So if we use, if you try to apply the range strategy here, I don't see any range. It's been a strong downward move.
Yeah.
Okay. Been a strong downward move. So that's what we're going to exploit for now. Okay. What's your view, Robert?
I'll go with what you've said. As long as the Fed keeps having interest rates going up, then it's all about the erosion of the purchasing power of the American people, because at the end of the day, they've been enjoying most of their income at good interest rates. Now, due to inflation, of course, there's there's the whole prices going up, and the Fed has to make sure that they're reining in on the inflation, and that means an increase in interest rates, and that means the ordinary American citizen will have an issue, especially when you're dealing with, let's say, luxury. They'll have to make a choice between, what's really important and what's a luxury. So if tech companies are caught up in that, then you'll see a reduction in demand in some of their products. And if there's a reduction in their demand, then that can only mean that, price of their stocks will fall. If stocks of, let's say, like 50 tech stocks drop due to drop in demand, then of course NASDAQ will be on a downward trend.
Sure. I'm trying to find a setup which is in line with our presentation today, which is range trading. And here I'm finding something, right? Or a 4-hour chart. Although these ones have happened previously, but it's something to have given a lead in terms of where the markets could go. Look here, there are scenarios where we had the market taking ranges. Look at this one, and this one takes me back to what I say, that sometimes the trend of the market can influence the outcome of the range ultimately. Look at this strong downward move. The price has been ranging for some time. Then once it breaks, it's a strong downward move.
Yeah.
Look at this range here. Another one here. Okay. So it's very easy it's very likely that you can as well use the ranges in a trend. Look at that. A very strong, a very nice range, but with 3 touch points. Once it breaks to the lower side, it pans out to the downside. Look at all those ranges. Seems like waterfalls. Okay. Seems like waterfalls. So
beautiful setups there.
Yeah, if someone was to go to lower time frames, then it could have given very good entries to the downside. Like if you find one at one point here where the price is not able to break, and then if, for instance, you added a chart, sorry, not a chart, added a moving average, so you can see the overall trend, then it could likely help you even to filter out the likely, not 20, let's say like 100, right? Exponential moving average, you insert one. So it's a downtrend. You find a range, and let's put like a 200, might be a little bit clear. So look at that. It just shows a clear downtrend. And then when you're caught up in a range, then look for entries just to play out. And because the overall trend is downside, it's a downside. Whenever the support area is broken, then it just goes falling that way. So I hope now the trader was seeking to understand what is happening with the NASDAQ, then it's a little bit clear. Okay. It's still playing out within the downtrend move. And here you can get a very good resistance. I don't want us to go beyond what we are covering, but look at this, getting resistance on the moving average. Here we have some double top kind of a setup. Do you see that as well?
Yeah.
Something like an M. I'm trying to show it up.
It's an M that is not complete. There are 3 variations of an M, the one that comes to the previous high, the one that fails to get to the previous high, and the one that breaks the previous high, but then drops. So that's an M.
Small one M, and then
that pinned the EMA.
Look,
so presented a good setup.
And then this one comes against something which could have been a resistance, right? So if it breaks down, if it maintains below this one, then it could be going downwards. I don't know, but we just watch out. Okay, so which indicators using on the screen? I mean, we have moving averages. This one moving average and just the candlesticks. In this case, we had a stochastic indicator, right? And no other indicator in this case. We're just using support resistance areas. UK 100, we're using moving averages, right? But the key thing we're talking about here is where you have a consolidation. We didn't check out for the one on Eurocard. We didn't even remember. I didn't even remember we had this, but look at that. Top of the range, and we have the lower side of the range. Okay, and you can see how the price panned out.
And we can see the EMA kind of came through here at some point, and acted as some kind of resistance before market shut down.
I'm getting another question here, Robert. It's about a gap. What happens when there's usually a gap in the charts? When a gap, you want to take that one?
Yeah, I can take it. Yeah. So a gap basically is when, orders come in thick and fast. Yeah. But basically a gap has to be closed, and sometimes it all depends on the asset we are dealing with. Yeah. But in most currencies, a gap gets closed within a week. But there are times when a gap, I can't remember, was it in 2017, 2018, where we had Euro USD that had a gap that was closed at, I don't know whether it was Euro USD, it was the pound. But anyway, it took like, I think 6 months.
To
if I can remember that, to close that gap. So, there are guys who are trading that gap, yeah. So they were waiting for it. They were shorting, counter trend trading. So there's so many traders got shaken out of the market by that move. So at one point the gap has to close.
Okay, so I hope Anthony is getting that clarity. And you see, I've highlighted a part here on the chart. So you can see that part.
Yeah.
I want us to zoom into that. That's a gap that happened.
Okay.
I hope the traders can see that part which I've highlighted. Let's see what up. This is the gap that he's talking about. It has to be filled. I'm zooming in so you see what actually happened. Okay, so going lower to 15 minutes, see what happened at that point. Where is it? Look at this. The gap has to be filled. So the price close at this point at some level jumped all the way. You can see that. It opened again at the bottom, and it had to fill all these before we proceed. You see that? That's what you actually explained. That's a gap.
And most gaps happen during Asian sessions. There's something about the Asian session and gaps. So
if let me put period separators. You see, when was that? You see that?
Yeah, sure.
So what you're saying is true, because you have the period separators. This was the end of the day from actually it's after the weekend, right? After a long weekend, the market opens with a gap. From 24th June, then you're going to 27th, 25, 26, and 27. The market opens with a gap, right? So I think we've answered that one quite comprehensively, and I do not see any more questions from the charts. I think we've covered all of them. Anthony Oganda, Theodore, Qtun, and all other viewers who are in with us here. We appreciate your time. We're happy that you're here to engage with us. You can follow us on our social channels at FX Pesa, right? On Twitter, Instagram, Facebook, okay? And here on YouTube, we're happy to be with you. Let's keep exchanging with each other, learning, ask questions, and we're happy to support you in your trading journey. For me, if you want to speak with me or have a chat with me, a conversation about these markets, I'm at Nakuru, Tower 1, third floor. Robert, you are at
Maisha Heights, third floor.
Thika, right?
Thika.
And we have other offices, Nairobi, Delta Corner Towers, 12th floor. Okay, Kitengela, we are at Kitengela Mall, third floor. I don't know what happened with us. We just in third floors.
There's something about the third floors, know that the number 3 means complete at some point.
Okay.
Yeah. Okay. So
and then also in Eldoret, third floor, Rupa Mall. Okay, and there's also Eastleigh. But in Eastleigh, you are on 4th floor. Okay. Al Mukarram building. All right then.
So for me, Robert, find me on social media, Mambogo Junior, Instagram, Mambogo Junior, Facebook. One has an N, the other one doesn't have an N. Last time, Mathew asked me what was it about it, yeah? So it's more of the British system and the American system. The American system loves the J and R, and the British system follows the JR. So I adopted both.
No worries. I see Boaz is requesting that we have a setup in Kisumu. Well, we will give you recommendations and I request to the management, see what they're going to do about it, right? And for me, if you want to follow me on social media, check out my handle at Mathew_Kabere. The pronunciation, it's the pronunciation or spelling. It's MATHEW_KABERE. The same on Instagram, Mathew_Kabere. And up to this point, thank you so much for being with us. See you next time. Bye.
See you next time. Cheers.